welcome everybody. So before we get started, my name is Advent and I am not a financial advisor. So anything that you see in my content or videos or in this video, it is not to be taken as financial advice. This is simply for educational purposes only. Trading does have its risks, so please do your research before you engage in trading. So today's agenda is going to be, and I'll probably add more things as more things come to me, but let me bring this down a little bit. So today's agenda is time continuity. We're going to be going over time continuity, full time frame continuity, and what that entails. Time flips, why it's important, multiple time frame breaks, and then standard versus electronic hours that new Strat users tend to get confused on. So starting out, what is time continuity? Time continuity is just a fancy word for the trend is your friend, right? So as we know, we mainly want to be trading with the trend. You don't really want to be going against time continuity because, I've been there myself, and I've seen a lot of people where they would be like, oh, SPY is at all-time highs. It needs to come back down, so I'm just going to short it. It can't go higher. And, as we can clearly see, SPY can definitely go higher, as high as it wants to go. And it's probably going to continue going higher based on continuity. So, time continuity, like I mentioned, it's simply just looking at price action, looking at the different time frames, and it's letting us know what's going on. So for example, let's look at NVIDIA. And something to note, we're going to be doing multiple time frame analysis, essentially looking at what the time frames are doing, and from there we're going to decide, or not decide, but we're going to see what the chart is telling us. Are we overall bullish? Are we overall bearish? Are we like kind of half and half? Like, are there mixed signals? I forget the exact term, but I'm sure it'll come to me as we continue. Is there conflict? That's the term. Is there conflict? Is some of them green, some of them red, etc.? So looking at NVIDIA, we start from the top down analysis. Very, very clearly, we are bullish, as we can see here. Super bullish. We've been bullish since basically 2015, just straight two up over and over and over. So currently, green on the yearly, very, very bullish. Quarterly, very bullish as well. Monthly, bullish. Weekly, bullish. Daily, bullish. 4 hour is an inside bar, but overall we are bullish. So in this case, for me, I would consider NVIDIA in full time frame continuity. That just means that almost all of the time frames are the same. So all the higher ones are the same, and some of the lower ones are the same as well. I don't really bother going under the 4 hour personally when I'm considering full time frame continuity, but usually the daily and higher is what I will put into the basket of full time frame continuity. So like I mentioned, whoever's shorting NVIDIA, you're hurting pretty bad right now. You don't really want to short anything until at least the weekly reverses, as we can see here. The weekly has been two up for the last, 1, 2, 3, 4, 5, 6, 7, if I can count. 6, 7 weeks straight bullish. Continuation. But we can see here, when the weekly finally reversed to the downside, then we got a nice little pullback where you could have shorted it and caught a nice move. I think this would be about $130 that it pulled back before the split. So you don't really want to short anything until at least the weekly reverses. And that's like if you're swing trading. If the setup is there I personally would definitely short it on a day trading basis, but not a swing trading basis. If I'm going to swing trade shorts, I'm going to at least want the weekly to be red, or if we're short, to go bullish, whatever it may be. Cool. So yeah, time frame continuity, again, pretty straightforward. We're just doing analysis and what the time frames are doing. After I finish over time flips, let me just make a note so I don't forget. I'll go over, like actually trading this. Actually, I'll talk about a little bit about that now, just since I'm already here. So trading with FTFC and then going against FTFC. Or even just time continuity, either one. Let me just bring up my Thinkorswim so I can show you guys a short. While I did not take this short, I was reviewing the charts on Friday, and this would have been a nice opportunity to short NVIDIA on a day trading basis, not a swing trade. Just give me a few moments here as this loads in. All right, loading up. Hopefully they aren't doing any maintenance. There we go. Perfect. So let's go to the NVIDIA chart. So like I mentioned, NVIDIA very, very, very clearly bullish on basically all the time frames. Super bullish. I think this is just a glitch with Thinkorswim with this like big wick up here. It never hit that price yet. Anyway, so if I'm gonna go against time continuity or full time frame continuity, I'm gonna take a reversal off of a broadening formation. Remember, broadening formations are telling us where price wants to go. So if price, as we can see here, it reversed off, it was bearish and then it reversed upwards off this BF. So it's letting us know that price wants to go back and hit this level up here, which we finally did on Friday. So if you were swing trading and you took this reversal off 118, you pretty much could have held all the way to max target up here. I personally would not have held my full position up here. I would probably use like maybe my runners I will leave to see if they will hit this level. But again, you don't really want to go against time continuity unless it's off broadening formations. At least that's what I do personally. So as we can see here for Friday, once we broke through this level, we came back, it rejected here, there, and then there, and we printed a 2-1, an actionable signal where we can take in the 2-1-2 down. So this 2-1-2 down, you would have entered in right here. Stop loss could be either up here or up there, depending what you prefer, and you would have caught this move down. Or if you missed that setup, as we can see here, it came right back, rejected again off the broadening formation, you could have taken a short off that level. But again, you don't want to short just because you think it can't go higher. Trust me, it can definitely go higher. Let's look at, let's go back to TradingView to see a cleaner chart. Whoever, I think it was on the daily. Yeah, so whoever was shorting NVIDIA, whoever's shorting NVIDIA around the 74 level or before the split, actually no, it was less. It was all the way down here. This was when it was about $300 and when it gapped up and stuff. So whoever's been shorting NVIDIA since down here, and assuming they're still rolling their contracts because it can't go any higher, trust me, it can go higher, as we can see here. So instead of people fighting the trend or just trading with their feelings or emotions, you could have been trading with the trend this whole time and you would have caught this whole move. There's people who are still in this trade. While personally, I'm a little salty that When my brother told me to get some NVIDIA shares for his account, I got them around like a 130, 140, which have been around this price here. And his portfolio is doing fantastic. I wish I got some myself, but hey, we'll catch the next one. So even after this big gap up when earnings came out, you could have caught in this reversal back into continuity to the upside. So there's 2 down, 2 up. You could have entered right there, and you could have gotten back into continuity. What does that mean? Trading or getting in back into continuity or taking a reversal back into continuity simply means we're overall bullish. Oh, of course, as we can see, the weekly turned bearish, but then it went back bullish. So I'm getting back into continuity. Something to pay attention to. Similar here, we get the pullback. You take a 2-1-2 up, back into continuity. So you could have went long at about $89, and you would have been sitting very nice right now. Cool. Generally, if you're a swing trader, you may want to focus on the daily or mainly the weekly time frame and higher when you're swing trading. If you're day trading, at least for me, I focus on the weekly and lower, but realistically speaking, I really only look at the daily and the 4-hour. I'll like glance at the weekly or the monthly, but I won't really let it dictate my day trading decisions. So I mainly just focus on the daily and the 4-hour. So when you're going against continuity, like I showed you over here, you want to take the reversals off of broadening formations. So I would have shorted this and I would have shorted that. And those would have been winning trades, as opposed to just shorting this big move just because. Because whoever was shorting these levels, sure, you could have caught in a decent move intraday, but if you were swinging it, you're hurting right now. So I'm only going to go long off a broadening formation if we're bearish, or I'm going to go short if it's off a broadening formation, like rejecting off of it, as we can see. So keep that in mind. Cool. So the next portion that we're going to go over, and something to note, and I'll mention this again later, you want to use regular trading hours or standard trading hours, I think the term is. That's not what I'm looking for. Regular trading hours or extended trading hours, either one. I had a typo in my notes. I'm like, standard trading hours doesn't sound correct. So yeah, regular trading hours, that's what you need to have it on. So time flips. What are time flips? Time flips is simply just letting us know when the new candle is going to print. You know, when the time frame, whether it's bullish or bearish. So for example, we look at the 4-hour. We opened up here and we're under that open price, so we're bearish. If it goes back up and it flips green, we're going to be flipping bullish instead. But as well, on top of that, the time flips, they're letting us know when the new candle is going to print. So for the 4-hour, we're going to print a new candle at 9:30 a.m. and at 1:30 p.m. Eastern. If we go on the 1-hour, 9:30, 10:30, 11:30, so on and so forth, X, Y, and Z, until the end of the day. The last candle is 3:30. What I find new strat users doing is that they'll have extended trading hours on, and you'll get incorrect time flips. For example, this 12 o'clock candle is an inside bar, and let me just compare it really quickly with this. As we can see, there's no inside bar at 12 on the 1-hour on NVIDIA. So you're getting incorrect candles, first of all, and you're getting incorrect time flips. So you always want to make sure that you're on regular trading hours and not extended. And you also get incorrect candles, like I mentioned. Like on the 4-hour, we have a 3-1-1. In reality, we have a 2-1 setup. So you want to pay attention to that. Now, of course, if you trade futures or whatever it is that you may trade, generally I trade futures only during regular market hours. It's very, very, very rare that I'll take a trade after hours or pre-market. But if you trade, if you trade like pre-market or after hours, sure, you can take a strat setup, with extended hours. But again, I personally don't. I mainly just trade the New York session. Cool. Now, multiple time frame breaks. What is a multiple time frame break? Well, I do have a video on that in my channel. I'll just go over it quickly here. Let's go on the 1 hour, see if we can get that. So this is the 1 hour trigger. All right. This is the 15-minute. Let's do the 1 hour and the 30-minute for this example. So as we can see here, this is the 1 hour. So this would be the 1 hour bullish reversal. And then let's go on the 30-minute. This for the 30-minute is going to be a 30-minute continuation. 30-minute. Actually, no, this would have been a 30-minute 3-up bullish reversal back into continuity as well. So something to note is when there's multiple time frames that are breaking a level to go long or short, the more time frames that are breaking in your direction, the better the probability of the trade. So for example, people like to do this that are new to the strat. They'll go like on the 5-minute and they'll do something like, let's see if I can find a good example. Let's just say, for the sake of the conversation, since I can't find a really good one, I'm trying to find if there's like a choppy day or something. Let's say in this example here, right? We get the reversal back up and then be like, all right, cool, it's going to reverse back down. Let me take this short. But if time continuity isn't really there with you, or if there aren't other time frames that are in a bearish trend, then this is just, you're just going against time continuity and you're going to mess yourself up. So they'll take like a short off a 5-minute, but then the 1 hour, 30-minute, and everything else is bullish, or vice versa. You don't want to do that. Granted, this looks like it's probably what would have been a H pattern that failed. They made a higher low and reversed it. So something to keep in mind of. So when there's multiple time frame breaks, that just adds more probability to your trade in my experiences. So you can even like practice and just like write them out on the chart so you can visually see it. But yeah, that's pretty much it for today. Any questions at all, please send me a message or type it in the comments below. I'm pretty quick to respond. I usually have my phone near me. So yeah, just put a comment below, all that good stuff. If this was helpful at all, please like the video so it can get more traction and get shown to other people, so we can grow the channel and get this information out to people who need it. And of course, if you haven't already, would definitely appreciate if you subscribe. Every single view, like, and subscription is greatly appreciated, and I really thank all of you. Other than that, enjoy the rest of your weekend, everybody, and enjoy your day.